On January 31, 2025, the financial world watched in astonishment as President Trump announced a sweeping 25% tariff on all imports from Canada and Mexico. This unexpected move, effective immediately the following day, sent shockwaves through global markets. Investors were caught off guard, scrambling to assess the potential fallout from this dramatic escalation in trade tensions. The immediate impact was undeniable. Stock markets tumbled, with the Dow Jones Industrial Average plummeting over 500 points in a single day. The value of the Canadian and Mexican currencies plummeted against the US dollar, reflecting the sudden uncertainty surrounding North American trade relations. Amidst the turmoil, one asset stood defiant: gold. Long considered a safe haven during times of economic and political uncertainty, the price of gold skyrocketed. Investors fearing the worst flocked to the yellow metal, driving its price to an unprecedented all-time high of $2,842.80 per ounce. The president's tariff announcement, while unexpected, was not entirely out of character. It reflected his long-standing belief in protectionist trade policies and his willingness to use tariffs as a tool to advance American economic interests. However, the timing and scope of these tariffs caught many off guard, raising concerns about a potential trade war and its impact on the global economy. Throughout history, gold has held a unique allure. Unlike paper currencies, which are subject to the whims of governments and central banks, gold is a tangible asset with intrinsic value. It cannot be printed at will or devalued by inflation. This inherent stability has made gold a safe haven for investors during times of crisis. When uncertainty grips the markets, whether due to geopolitical tensions, economic downturns, or unexpected policy shifts like Trump's tariffs, investors seek assets that preserve their wealth. Gold, with its long history of holding its value and even appreciating during turbulent times, becomes a beacon of stability. The reasons for gold's safe haven status are deeply rooted in human psychology and economic history. Gold is a finite resource. Its supply cannot be easily manipulated. This scarcity, combined with its durability and universal acceptance as a store of value, has made it a reliable hedge against inflation and economic uncertainty for centuries. Donald Trump's fascination with gold is well documented. From his early days as a real estate mogul to his time in the Oval Office, Trump has consistently expressed an affinity for the precious metal. This interest extends beyond mere aesthetics. Trump sees gold as a symbol of wealth, power, and stability. In the 1980s, Trump famously adorned his Trump Tower penthouse and private jet with lavish amounts of gold. This ostentatious display of wealth was more than just a matter of personal taste. It was a statement about his belief in gold's enduring value. More recently, Trump has spoken favorably about the gold standard, a monetary system in which a country's currency is directly linked to the price of gold. While acknowledging the complexities of implementing such a system in the modern era, Trump has expressed nostalgia for a time when currencies were backed by a tangible asset. Beyond the immediate market reactions, there were broader signs of unease within the financial community. Goldman Sachs, one of the world's leading investment banks, issued a report reiterating its long gold recommendation, urging investors to increase their exposure to the precious metal as a hedge against further market turbulence. The global markets, already on edge due to ongoing trade disputes and geopolitical tensions, reacted swiftly and dramatically to Trump's tariff announcement. Currencies fluctuated wildly, with the Canadian and Mexican pesos experiencing their sharpest declines in years. The US dollar, initially strengthened by the flight to safety, later gave back some of its gains as investors grappled with the potential long-term consequences of a trade war. Stock markets, after their initial plunge, remained volatile, reflecting the uncertainty surrounding the future of North American trade relations.
Section 1: A glimpse into the future, volatility and the gold standard. Predicting the future direction of financial markets is, well, a fool's errand. However, one thing seems certain: volatility is here to stay.
The interconnectedness of the global economy, coupled with geopolitical uncertainties and the unpredictable nature of President Trump's trade policies, suggests that we are entering a period of prolonged market turbulence.
In this environment of heightened uncertainty, gold is likely to remain a sought-after asset. Its safe haven status, combined with its historical role as a hedge against inflation, suggests that investors will continue to seek refuge in gold as a way to preserve their wealth.
Trump's tariff shockwave has also rekindled the debate about the gold standard. While a return to a gold-backed monetary system seems unlikely in the near term, the president's affinity for gold and his skepticism of fiat currencies have breathed new life into this long-dormant discussion.
Section 2. The allure of gold. Benefits for the prudent investor. For investors seeking to navigate the treacherous waters of today's financial markets, gold offers a compelling array of benefits.
First and foremost, gold is an effective hedge against inflation. As the prices of goods and services rise, the purchasing power of fiat currencies erodes. Gold, however, has historically maintained its value over time, acting as a store of wealth that preserves purchasing power.
Second, gold provides diversification benefits for investment portfolios. The price of gold tends to move independently of other asset classes, such as stocks and bonds. This low correlation means that when stock markets decline, gold often either holds its value or appreciates, providing a buffer against losses in other areas of a portfolio.
Third, central banks around the world, particularly in emerging markets like China and Russia, have been steadily increasing their gold reserves in recent years. This trend suggests that central banks recognize the importance of gold as a safe haven asset and a store of value, further bolstering gold's investment case.
Section 3. Navigating the golden path. Risks and considerations. While gold offers numerous benefits, it is not without risks.
Like any investment, gold prices can be volatile in the short term. Factors such as changes in interest rates, currency fluctuations, and investor sentiment can all impact the price of gold, leading to potential short-term losses.
Investors considering adding gold to their portfolios should also be aware of the costs associated with owning and storing physical gold. These costs can include storage fees, insurance premiums, and transportation expenses. Additionally, investors need to consider the tax implications of investing in gold, as capital gains taxes may apply to profits made from selling gold investments.
Finally, it is important to remember that gold does not generate any passive income. Unlike stocks that pay dividends or bonds that pay interest, gold relies solely on price appreciation for returns. Therefore, investors seeking current income streams may want to consider other investment options alongside gold. Section 4. Beyond the horizon, gold's enduring relevance. As we move further into the 21st century, the role of gold in the global financial system remains a topic of debate. Some argue that gold is a relic of the past, its importance diminished in a world dominated by digital currencies and complex financial instruments. Others maintain that gold's unique properties as a safe haven asset and a store of value ensure its enduring relevance. The truth, as is often the case, lies somewhere in between. While gold may no longer be the cornerstone of the global monetary system as it was during the gold standard era, it continues to play an important role in the portfolios of individual investors, central banks, and even some institutional investors. The ongoing appeal of gold stems from its ability to provide a sense of security and stability in an increasingly uncertain world. As long as geopolitical tensions, economic volatility, and inflationary pressures persist, gold is likely to remain a sought-after asset, a beacon of value in a sea of uncertainty. Section 5. Conclusion: a golden age or a gilded cage. Trump's tariff shockwave has served as a stark reminder of the interconnectedness of the global economy and the speed at which events can unfold in today's fast-paced world. It has also highlighted the enduring allure of gold as a safe haven asset, a store of value, and a hedge against uncertainty. Whether we are entering a new golden age or simply finding ourselves in a gilded cage of economic uncertainty remains to be seen. What is clear is that gold, once dismissed as a barbarous relic, has re-emerged as a relevant and even essential component of a well-diversified investment portfolio in these turbulent times. As we navigate the uncharted waters ahead, understanding the role of gold, its benefits, and its risks will be crucial for investors seeking to preserve and grow their wealth in the years to come.